Good morning, good afternoon, and good evening. Welcome to Invest Africa's 2026 Central Africa Outlook webinar, bringing our Outlook series this month to a close. I'm Chantal Carrington, CEO of Invest Africa. With Invest Africa being a leading platform to drive capital from the capital hubs to Africa, we will be unpacking the region's economic and risk outlook to keep our network informed as I navigate investment. Today, we will look at how Central Africa enters 2026 with cautious optimism, supported by stabilising oil prices, renewed infrastructure investment, and a gradual diversification of efforts in non-resource sectors. We will discuss how we enhance fiscal stability and build resilience amid global uncertainty by considering a few factors. So firstly, natural resources and diversification, where all dependent economies such as Gabon, Congo-Brazzaville and Equatorial Guinea are seeking to balance energy exports with investment in agri, timber and manufacturing to reduce vulnerability to commodity cycles. Next, infrastructure and regional connectivity, where improving transport along the Congo Basin and CMAC network is vital for trade facilitation and market access, with priority projects being cross-border roads, energy interconnectors, and digital infrastructure. Also, monetary stability and fiscal reform is, of course, important, with relative currency stability, fiscal deficits, and inflationary pressures still persisting. Strengthening public finance management and increasing domestic revenue mobilization are absolutely key to long-term stability. And lastly, private sector and investment climate, with emerging reforms in Cameroon, the DRC, and Chad signaling some progress. Improved governance, transparency, and regional cooperation can definitely unlock greater investor confidence. So, Olga, I'm looking forward to handing over to you now to lead the discussion and also introduce Rodrigo and Mustafa. I think is running a bit late, but thank you very much. So over to you.
Thank you very much, and thank you for having us. Thanks to Invest in Africa. So I will start by presenting myself. My name is Olga Kindina. I'm director of Concerto West Africa, West and Central Africa. So Concerto is a French PR firm. We are based in like seventh market, like emerging market. We are focusing on emerging market. At the same time, I'm also director for the Pan-African Media Relations. So very glad to be here today. I invite all the attendees to present also themselves in the chat. You can do the same. So welcome again to this panel dedicated to Central Africa. Note that the panel is dedicated to Central Africa as a region. And I would like to be very precise here. When we say Central Africa today, we are referring to a geographical and economic region, not a monetary bloc only. So the discussion today, therefore, goes beyond the CEMAC zone and include also countries such as DRC, Angola, which are key Central African economies, but are not part of the CEMAC monetary unions. So the distinctions really matter because while these countries operate under different monetary regimes, they are deeply interconnected through trade, infrastructure, investment. This is kind of stuff that we're going to see during this panel. So to explore all this dynamic, I'm delighted to welcome two great leaders with strong operational and strategic exposure to Central Africa. I will start by Rodrigo. So Rodrigo is CEO of Mitredi Groups. It's a group actively delivering large-scale development and infrastructure. It's a Swiss-based international company with more than 30 years of experience that has delivered over 100 national-scale projects. So Rodrigo has led Mitredi strategic growth, including significant initiative in Angola and other key African markets. Thank for being here, Rodrigo. And then
Thank you for having
we
us.
have Mustafa Wojib running a little bit late, but I'm sure that he's going to join us sooner or later. So Mustafa is the CEO of Robank, leading private bank in GRC, well known, is the largest private commercial bank in GRC. So let's deep dive. I hope people still join us and present themselves in the chat. So we'll start by looking at the policy and macroeconomic context before moving to the implication for investor, operator, and long-term growth and development in Central Africa. I'm sure that nowadays, like I mean, since last week, a lot of people saw the current macroeconomic situation in the CEMAC zone, which has been under close scrutiny over the past few years, but more particularly over the last week. So the region CEMAC, so now we're talking about the CEMAC, the monetary zone. The region has faced mounting pressure related mainly to public debt level, fiscal deficit, external shock, and the need to preserve the monetary stability. So of course, this raised the attention of International Monetary Fund. So last week, the head of state of the CEMAC met in extraordinary summit in Brazzaville. So they have four pillar actions that they took. We have key decisions such as transparency and governance, securing economic and food sovereignty, and repatriating export earning to bolster foreign exchange reserve, what I think will be the most difficult. So my first question for you, Rodrigo, what do you think about those reform as an investor operator perspective? Do you think they will be more effective? Which one will really be effective for the region?
Thank you, Olga. Look, these reforms that actually were announced, they're not new reforms.
Mm,
So they are basically restating the political ownership of this macro stability that will allow development on ground. I think we've been watching it for a while already.
mm,
And to me, really, I think there is no wrapped solutions. I think it's a very good move, a very clear move to tackle the instability that the region is still see. And the region is still see that instability recognition has economic consequences. So to me, more than the policies, that is very important. I think what really is going to create the new dynamics for mobilization of capital, etc., is the execution of the policies. I think this
mhm.
is the most important thing, the way that I see.
Yeah. But do you think that even if we execute it well, those policy, are they credible enough to like change the trajectory of the region in like the medium term?
I think yes, and I think we are seeing somehow this happening. I believe that the credibility comes with the consistency, not with the announcements. Markets are watching this implementation and not only the policy intent. Okay, so I think together those reforms can bring an aim to bring stability on the debt that I think is an important topic for
Mhm.
us to discuss. The stress of the liquidity that those markets are facing, and in some places improve, in other places even restore investors' credibility. So I think also that Central Africa geopolitical relevance has increased faster than the execution capabilities. The region is now firmly on global strategic map because of critical minerals, energy security, and the urgency on the supply chain resilience. And I think these reforms comes to help to shape what needs really to be executed on ground.
It's perfect that you're talking about what happened on the ground because we can see that despite the fact that we are talking about a lot of situation, what happened, but do you think that I mean the situation differ significantly when you look at non-CEMAC Central African country, as you just talked about? And what will be the difference? Like, what are the situation in Angola or DRC market that meet really well, like know very well?
I think generally speaking, there is still a concern from operators and investors' perspective, but I think it's a bit different from what we saw a few years ago. A few years
Mm,
ago, there was less interest. I think there was also less capital, higher risk, less knowledge. And today the situation is really different. Uh, if you see, even though the debt levels are rising up, we can see even as a good sign. It seems that more entities are willing to come, to invest, to lend. Okay, but one important thing that I think is changing all over, mainly in this region, mainly Africa, Sub-Saharan Africa, is the structure of those debts. We see more and more and, and even more promotion of
mm,
sharing concessional with commercial debts. We see a huge attention that we
mm,
didn't see before, and we see evolutions on ground about it. Solutions for FX exposure. We see pretty much different profile and maturity of the debts that are being operated in this region. So all the attention driven to the region alone, you not make the market investable. Okay. And this, I really appeal for the private operator, the execution in the capacity and the ability to deliver complex multi-sector projects.
mm.
In the end is what's going to converge the strategic interest of operators, governments into the bankable opportunities. The money today, I believe, is flowing. I think is missing is the bankable projects. I'll give an example, for instance, of Angola. That's a place that I know relatively well. If you look in the last years, the debt of Angola rise
Mm,
up substantially. Okay. On the other hand, the profile of the debt is much better. You have more diversified financial tools. We have a much more mixture on the source of income of the country. A few years ago was basically 100% oil. Today there is a huge diversification and we have a better accessibility of the market. We see examples of changing the law, for instance, on the energy sector, allowing private sectors to come for concessions. We see PPA going on and you see a lot of PPP activity in the country that's quite new.
I like how like the conversation moving actually from the policy directly to the private sector development. And we're talking about what happened on the ground, despite the fact of all the policy and all the struggle in the CEMAC. But we can see that on the ground, when you look at what happened in Cameroon, private investments, share GDP has risen over the past 5 years. So this quietly match what you just say about what happened in Angola too. We can see the growth from 13% to 18% the last 5 years, and even in Chad, which are also part of the CEMAC, we can see when they want to mobilize more capital. Like you say, the more capital we're going to have, the more we can invest in like some in lot of projects. And now, if we can talk about the regional cooperation, like what do you think about like we mostly talk about the regional cooperation in abstract term, but do you have concrete example on where it really made the difference for the private sector in the region? I know me truly works on the Lobito corridor. Maybe you can talk a little bit about that.
Yes. I will get to Lobito Corridor, but I think it deserves an initial approach.
Yeah.
As a private operator, Mitrelli is working in Africa for the over 3 decades. In
Mm,
Angola, Mozambique, Ivory Coast, Senegal, among others. And the policy was always to create roots. We are not operating a short-term capital or passive investment. We really operate as a strong commitment on a long term, aligned pretty much with government and community. We really believe that this is very important in order to leverage all the index that you mentioned there. We are operating in various business model, I would say. We are investors on our own assets in agro industry, for instance, developers on real estate. We operate as EPC plus F. We operate also with the government on PPP. And I think this was part of policy making from the past, such as faster administrative process that few governments establish, for instance, a tax filing on a digital aspect. That's the time that you take to open a company in those places. And I think also these policies help to create a clear sectorial entry points. And Mitrelli today acting most of them in the energy, water and food security, urbanization, health, education, and technology. So these are results somehow of the policy making that we talked before. Mitrelli specifically is also working in few other fronts. One of them is the Lobito corridor that gave us a very good background from the activities that we had so far. We have mobilized already over $10 billion investment in Africa, turning national priorities into bankable and executable platforms. We have few examples on this regard, and I think it's worthwhile to mention on the urbanization process that all Africa is facing, and we know that is a challenge the same way that is an opportunity for the future. That in the coming 10 years, Africa will have more working age people than China. So the urbanization process is faster than the demographic itself. So it's create huge opportunities on policies that are needed to be tackled, and also from private investment to support governments to do those policies. One of them is exactly Lobito Corridor. Lobito Corridor is very well known today as the railway that connects the Atlantic to Lobito in the west of Angola to DRC and Zambia. The major goal of this corridor is connected to the critical minerals, is to facilitate, to make it cheaper and faster, the transit of those goods in this corridor. Few operators, and we are one of them, believe that the corridor has to be more than that. Along this corridor, more than 40 million people are living in. So it represents also a huge opportunity for progress. In this opportunity, our UBO is capitalizing $1 billion American dollars for investment in agro-industrial, logistic, mineral processing, and energy. That's another big issue that needs to be discussed. And we believe that those policies and those mega projects that are happening today in this region is one of the catalytic tools to generate impact on the long lasting for the generations to come.
And in terms of the regional cooperation, in terms of the impact, can you share with us some number or some added value of the Lobito corridor for the country in the region? And I think the question that people can have is mainly like, how can we realistically scale this kind of project across the region? Like in terms of lesson learned, if you need to advise how how could we realistically scale it across the region?
Yeah. I would mention few parameters here. One is the capital mobilization. Today in Lobito Corridor, DFC has invested already more than $500 million, almost $600 million. There are some private capital, and there is also participation from the government in concessions, in many other aspects. Lobito Corridor connects the biggest producer of cobalt in the world, in DRC, in the Copper Belt. However, the export value is consumed by over 30% on costs or by the insufficient due to the cost of logistic and energy. So only this data, I think, can bring a lot of progress and a lot of opportunity in this region. When you bring energy to this region, you don't bring only to this region, you connect many villages, many municipalities along the path. Okay, it generates additional mega projects that I can also mention here that luckily we are part of it. Also as investors, there's a project called Hydrolink. I can call it in a minute. The Hydrolink also is a reflection of the opportunities that these mega logistic projects are generating. So, and imagine that we're going to have a railway going and coming, decreasing the time of transferring the goods in 80%. Actually, we're going to execute this this logistic in 20% of the time that is today, reducing a lot of costs. And of course, a lot of logistics, a lot of activities are going to run around this corridor. So there is huge opportunity for, also to help to bring to the population water systems, accessibility to energy, to create new industries along the corridor in order to put the products in the railway and ship it either to the Atlantic, either to inside Africa.
You talked about capital mobilization, but this is just the first step. What another lesson when are we starting to implement the project? What will be the lesson learned during the implementation phase?
I think one of the major things that I'm in this region for around 2 decades. Many times the issue is not the money, is what we talked in the beginning. I think it's mandatory to have the right partners, the capacity of operating, the capacity of mobilizing, even communities and government when is needed. And I think the know-how of the region when you want to implement such large-scale initiatives, you really need people that are committed with a long-lasting relationship. I think this region has no space for short-term capital. There is no space for short-term results, no matter what. So when you're committed to that, I believe that great initiatives is becoming realities. And I can say it by our own experience. Okay, we have implemented over 100 mega scale projects, national, international, or transnational projects in the region, very well successfully. We have independent projects of over $2.5 billion that's fully delivered according to the scope, pretty much according to the time, regardless all the constraints that we know that the continent face, exchange rate, political change, etc. So I think when you have this vision that Africa is already present, and you need to be here present to collect even more and more fruits in the future. I think this is the name of the game. And I think there are few investments, and I face few investors that they say they failed because they didn't manage to select the right partner for execution, even though they have the money. So they see the risk not on the returns. They see the risk on the operation, on the execution. And I think to me, this is what is making the biggest difference on the successful projects and the ones that never leaves the paper.
Yeah, I do agree. I totally do agree. So building on what we just discussed around trade corridor, regional corporations, we can definitively say that infrastructure clearly sits at the heart of the regional integration. and for sure the growth in Central Africa. I would also like to highlight like a kind of project in the CEMAC regions. So it's a corridor around Cameroon, Gabon, Equatorial Guinea, and which kind of also give lots of trade facilities, market access to the regions. So we can see that definitively the infrastructure is important. But I would like to ask you also, Rodrigo, from your perspective, in terms of infrastructure gap, um, which infrastructure gap are currently the most binding constraints to growth in Central Africa? Is it transport logistic, power reliability, or digital connectivity, in your opinion?
It's a
Mm,
tough question,
I know.
but uh,
But if like I can help you, where do
mhm,
you see the most immediate opportunities
yeah.
for impact?
So if I have to pick one, I would
Mm.
say that the energy today is leading, and we see a few initiatives. If you see Africa 300, for instance, that the idea is to connect 300 million people out of the 600 million people in Africa that has no reliable energy. And we see major participation of DFIs, ECAs in this process. I
Yeah,
think is one that I would pick. And I think with that the rest will come. You don't have digitalization without energy.
without
Right.
energy, yeah, I
The
was
data
about to say
centers,
that.
you know what it
Energy,
consumes, right? And
energy.
actually, we don't have progress in the end without energy. We don't have industrialization. We don't have anything. So I really think that this is very important. One important initiative, and Mitrelli, for instance, is working on energy and has
Mm,
executed major projects, mega national projects that has connected already millions of people in urban and rural areas. So we have some experience on that as well.
mm.
One of the challenges for this implementation is when it requires that, the requirements that are still put in Africa in terms of timing, to combine the timing that's needed for the implementation and all the bureaucracy that we may understand that is needed, but the speed of the process is still a big constraint. Okay.
Mm.
One another big initiative that we're being part, and I mentioned before, is called Hydrolink.
Yeah.
Hydrolink is another uh, mega initiative across the region that is very interesting, that reflects how really the region should be interconnected. So Angola, for instance, has surplus in energy production uh, because there is no, it's still missing the full capacity for transmission. Okay, but today there is capacity of production. And we are implementing a project of $1.5 billion. It's a private project that is going to connect one of the major production plants in
Mm.
Angola and bringing this energy to the copper belt. So it shows how the interconnection between the countries can work. So from the central west of Africa to Congo and Zambia,
Yeah.
uh, and then this is also connected to Lobito corridor. So imagine that we can have a lower cost of the minerals due to the energy. Most of the mines today are running on generators, and you have a major infrastructure related to logistic. So
Yeah.
it creates a major added value to the region. What
Yeah.
would be the next step once you bring the infrastructure, once you're talking about infrastructure? Is really start talking about processing those minerals. We shouldn't take it as a raw
Outside.
to be
Yeah.
processed outside and then you add value outside. So I think when
Industrialization.
you bring the infrastructure, all this progress, and that I connect again with the energy for the industrialization, I think then we start seeing the real fruits of those activities.
Yeah, and if I would like to compare to what happens in the CEMAC region, we can talk about the Nachtigal hydropower project. I don't know if you have heard about it. It is in Cameroon, And the purpose is really to increase the national electricity supply and to see how they can also supply the region. But first of all, to supply the national one. And the model is public-private partnership. So it has a lot of difficulties, but if they can look on the value added when you just say you mix this hydro project plus the Lobito corridor, the virtuous circle in the region can be very, very huge. So earlier you were talking about one of the first lesson learned from the Lobito project was mobilizing capital. I would like to know more about your relationship with the DFI and MDBs and how does they help you to de-risking at early stage? Like how does it work when we know that in Seville last year, DFI really want to expand their balance sheet. So how does mutually work with GFIs to the risking? Does it work or what do you think?
We have, as I mentioned before, I think, first of all, we have a short experience with DFI. We have today one project, is an agro-industrial project that is running in Ivory Coast, and we are there with DFIs. And I think without DFI, this project wouldn't be materialized. So first of all, I think it's a very important tool in order to develop uh, mainly activities that are crucial and really generate employment in the places that we operate. Uh, the other side is, and this is it's a local DFI.
Mm,
I think the major constraints when we operate with DFIs is what I mentioned before, is the timing to materialize it.
yeah.
And usually we had some experience that priorities may change before we consolidate all the needs to finance those projects. And
Mm,
then there is some waste of energy, and then priorities change and we are not able to materialize. So I think this is something that should be revisited in order to attain the needs of Africa. And eventually, when those things happen, the operators, and we know few, they move their strategy,
yes.
even though it might be a bit more costly, but at least we see things happening. It's
Yeah.
moved
Yeah.
to ECAs or eventually even directly private financing.
Yeah, it's very interesting what you're saying about the DFI. When we know that nowadays some investor, I mean, they have experienced like huge difficulties, like the time constraints. So what will be alternative structure have you seen works better on the ground when it's not when DFI are not always the right fit?
Yes, I think there are few, if I can call it, few products being launched,
Mm,
uh, and governments are developing those products, such as guarantees with bonds. You know, we have a very interesting
mm,
mechanism, a kind of consortium of banking. So everyone is de-risking and depends of the operator. It makes a lot of difference, and we have few operations like that that also make projects that theoretically nobody would like to enter with the full risk, and then you can de-risk with this kind of consortium. We have also we take some our own risk on the project as well, so it gives confidence for whoever wants, because we believe, and if you show that you are operating and you believe, the money flows easily. So those are pretty much the major mechanisms that we are using, and I
mm,
think in the places that the currency is more stable, the
mhm.
local financing, either through debts or even project financing, is already happening a lot.
No, it does work. It does work as soon as, like you say, kind of stability. And this is why it's very important, the policy. Again, I think we go back to the policy and how does it work. So we have discussed about infrastructure, regional connectivities, about working with DFIs or not. But I think what a lot of our attendees waiting for is the strategic importance of Central Africa in what we see beneath the ground. So we know that the region holds some of the world's most critical minerals. Talking about cobalt, copper, lithium, manganese, and I think this we cannot do the conversation without that. So I will just frame the discussion with few facts. In Democratic Republic of Congo, DRC, we have around like 70% of global cobalt production. And we all know that is a mineral essential for electric vehicle batteries, energy storage. In Central Africa, we also have copper, lithium, manganese, and all those minerals are critical and essential for renewable energy, grid infrastructure, digital technologies. And even Angola, which is not only major oil producer, start increasingly positioning itself in critical minerals. So I think today the question is no longer do we put Central Africa, does the Central Africa matters to global value chain? I think today is really like how the region position itself within these global value chains. So this is why we like much needed the insight of Mustafa. But let's talk about the how do we see like how can Central Africa better position itself within these global critical minerals value chain? Would you go? What do you think? Like how should be the position of Central Africa? And like you say in the conversation in the beginning, this is not only the extraction. We need to go beyond that. We need to go to the transformations.
Yes. I think the big move now, as you see, now we're talking about minerals. It could be all kind of minerals, oil, but even the critical minerals for energy transition. I think Central Africa needs to leverage, those commodities
Yeah.
and use this opportunity to diversify and to grow the economy. Because the moment is now. The population is growing, as you mentioned,
Mm,
in the young population, you'll be in Africa, the employment will be needed, and this diversification is a must. So it's the time to use all what the country is producing from the soil and move to agro-industrial, regular industry to really diversify the economy to prepare for the future. I think this is the way to leverage what Central Africa is giving to the world today. Okay. And this is totally related to what we discuss here, mobilization of capital, policies, long-lasting relationships, and you know, of course, there are few issues still in Africa, like the conflict in the border of DRC that was, it creates uncertainties, of course, all the political change that we have still in the continent. But as a long-term view, the moment is now, and this region needs to consolidate the foundation in order to face either challenges and opportunities that are ahead.
mm, mm. Yeah, and it's great that you are keep talking about the diversification. When we look at the oil-dependent countries' economy, such as Gabon, Republic of Congo, or Equatorial Guinea. So, do you want to share a little bit of practical diversification strategy that you saw on a country like Angola, for example?
Yes, I think the diversification can come in many ways. I think one of good example is a regulation about land property. Okay? When all the land belongs to the government. If the land belongs to the government, it's difficult to attract investors to develop the land, to, real estate activity, construction activity that generates, we say that civil construction usually is one of the motor of those rising up economy. So we were part of some of those policy making, and we were part of the operating uh, as private and also on behalf of government some new urban center developments that the next step now, and we're working also with the government to generate uh, how do you say, security over the land, and then you give, guarantees to banks to mobilize mortgage. So we bring mortgage systems that we don't see much still on the countries. So I think those are kind of initiatives that can generate diversification.
Education,
Another
yeah.
thing that is very clear in the region is the agro-industrial sector. There is in terms of land, in terms of uh, weather, in terms of with this corridor, in terms of logistic, you know,
Mm.
uh, it's unacceptable that Africa cannot produce the food
Yeah.
that consumes, that today we still see importation of foods all over Africa, and food is not being produced here. So this is another important aspect. And I believe also all this renewable energy that is a great potential to explore between the regions, and then all this diversification inside the regions, different countries, I think is another added value that can be explored.
Yeah, if I might add some insight on diversification, I really think that country that leverage oil revenues really have to invest on existing capabilities. I think the more that we invest in, like you say, energy, transport, logistic, human capital, I think it will be more powerful, like whether to start create new sector that sometimes they don't even have the knowledge, and at least they can invest in some existing capabilities. I think this is what we need more in like the CEMAC region. So we're moving forward to
Yes, if you allow me to do just a comment, we have few examples of scaling those initiatives,
Mhm,
really creating impact for population government that is really ring-race local value chains. You need to be pretty much active on that. Implement projects that allow participation of SMEs. This is a must for the economy diversification.
mhm,
And of course, the skills development. We have major programs on the skills development in all the regions that we are operating in. And we see that this makes a lot of difference. One example is we have specific training and infrastructure for training in rural areas. It avoid a lot of migration to the urban areas that today is a bottleneck for all these regions that we are talking here.
yeah. I do agree. We need more of that in the Central Africa region. So let's look, like is not the conclusion, but we start wrapping up a little bit during the policy priorities for the inclusive growth. What will you identify as the top three policy priorities Central African government should focus on to attract sustainable and long-term investment? Because this is what we'll be talking about here. We want to attract long-term investment, people who have vision. What will be the top three policy priorities for you?
I would say I identify the major constraints that I believe we
Mm,
face. So it should be the macroeconomic currency stability. I think this is mandatory if you want to attract capital. I
mm,
think we need to have logistic and energy capacity. This
mhm,
is a must to enhance any growth. And I think Africa in the last years improved a lot on it. but still, I think it requires additional effort on transparency and predictable regulation. Sometimes the regulations are not so clear, and also it increases the cost of capital or even aversion for investments. I would say that those three are the ones that call my attention.
I particularly agree, especially for the last one, the predictable. I think the investor want to see where they're going. I mean, they accept the risk, but they need to know at least where they are going. They need
Yes.
the region needs to be predictable.
Yes, I think
Okay.
on that you can really contribute to decrease the regulatory ambiguity that we pretty much see it, those fragmented markets, and then the capital will flow.
Mm, mm, mm. And how can the region better translate the natural wealth? Because now it is a fact we do have those natural wealth into inclusive growth, outcome, job skill, and social stability.
Yeah, I think one important thing is,
Mm.
and it it requires few players on that. Okay, I think first of all, part of the policies should demand on these mega projects implementation the real contribution to the countries. I
Yeah.
think this is a must. Okay, most of the projects that we do, we push hard to use SMEs, for instance, local employment, training, internship programs. I think it's very important. On the other hand, we know
Mm,
that when you search external finance, mainly backed up by ECAs,
mm,
part of the content needs to be exported. Okay, so it is somehow a bit of contradiction, and also sometimes make those investments a bit more expensive. So I think the policies on the financing requirements with the demands
mm.
when we implement mainly large-scale infrastructure could be reaccessed.
Yeah. So this, for example, must be in one of those top three priorities that Central Africa needs to put when a investor come to put some capital in a project, right?
Yeah.
Yeah, I totally do agree. And the last one and one
And sorry,
interesting.
when we do our investments, we took benefit from that because we usually mainly local production, local employment, etc., with no requirements. So it's
Which
another added value for who intend to invest.
Mhm. Which makes sense, I think. And what would success uh, look like for Central Africa by the end of this decade? I think you have the answer in many of the things that you say earlier, but if you have to wrap up it, what would success look like for Central Africa by the end of this decade from
Mhm.
private sector perspective?
Mhm. Um, I think I think success now to me is the speed on on the capacity of doing things, on delivery things. You know, we don't have
Mm.
time. I think you know the constraints we mentioned. I think everybody can point them very clear. And I think once we improve this, all what we mentioned here, quality of logistic, speed of
Inter.
the goods being transit,
Yeah.
manpower, you contribute for this speed because, you know, when you're being less vulnerable for long-term process, then you have much lower risks. This will be good for the business, you'll be good for government, and
Mm.
above all, you create a lasting impact for the African families for the generations to come. So I think it urs speed on all
Mhm.
the actions that Africa requires.
Yeah, I mean, I like the your point of view. We feel that you are on the ground, that you know the reality. From my eyes, I see more as a success the predictability. Again, I think investors need to read and understand the market. Should not be perfection, but investor need reliability and less policy volatility. And I think we need to moving up the value chain. We're talking about minerals. So we need to stop exporting raw materials. We need to develop process service skills. And I think for me also the success we mean inclusive outcome. So we need to create this virtuous cycle. So the growth needs to impact, like we say, education, job, skills. So we make sure that it's sustainable over time. So in the end of the decade, I think for me it will be clearly, but as you say, all this can happen if we speed. So I think speed can be the key word here. Thank you. Thank you, Rodrigo. I think what clearly emerged from the discussion is really the fact that Central Africa challenge is not a lack of potential or capital or even strategic relevance. I think the real question is how quickly, as you said, the speed, and how consistently we can bring the existing assets. I don't want to say potential because I don't think we should talk about potential in Central Africa. We already have existing assets. So it's like how we bring those existing asset projects to the next level. So the next decade for sure will be decisive, and we need to do the right choice, the right policy.
Thank you. Thank you very much.
Thank you, Callum. I will let you do the wrap-up session.
Wonderful. Thanks so much, Olga. And on behalf of Invest Africa, I would like to thank you for guiding us through this conversation today. And Rodrigo, of course, to you as well for your time and insights throughout the session. Thank you everyone for joining us. I just wanted to flag a couple of upcoming Invest Africa opportunities to further the conversations around the Central African region. On Thursday this week, the 29th of January, we'll have a deep dive session focused on the DRC with our colleagues in the Invest Africa team in the US. Which will take place at 10 a.m. Eastern Time, 3 p.m. UK time, or 4 p.m. Kinshasa time, depending where on the world you're able to join us. Please feel free to reach out to myself or George Meadows for further details on the registration link for that. And then, of course, we'll be in Cape Town next month for the Invest Africa Mining Series, where the Central African region will play an important role in our conversations across 3 days of programming from February 9th through to the 11th. So I do hope many of you are able to join us there. And as always, please do reach out to harness further conversations. And once again, we'd like to take the time just to thank Olga and Rodrigo for leading us through today's session. And unless Olga or Rodrigo any last comments, we'll look to close.
If you don't mind, I think I missed the question. The conversation was maybe too much.
Of course, Olga,
take,
please.
Like 2 or 3 questions, if Rodrigo don't mind, will be nice for the attendees. And sorry about that.
Of course, Olga, please.
Actually, I don't see the question on the Q&A. I don't know if you see the question.
So I think a number of the questions were answered sort of organically through your conversation, looking at how to the diversification beyond critical minerals and oil and gas. I think we covered as well as looking at sort of market entry and some of the policy decision making and maybe the gap between current policies and what it's like to operate on the ground, which I think Rodrigo covered, as well as looking at the role for diversification more broadly within the oil dependent countries. So unless there's any sort of closing thoughts, Rodrigo or Olga there, I think we hopefully gave everyone the opportunity to have those questions covered through the conversation.
Perfect. It's all good for me. Hand off to Rodrigo, maybe.
So I appreciate the opportunity. It's always good to speak about Africa and development challenges. We are part of it. We take full accountability on it. And Mitrele, I think, is doing well, while doing good, really. And we know pretty much a lot of operators that are doing the same, has this commitment. And I think it's a good place to be in the perfect moment. So I'm pretty sure that in a decade, we are going to collect the benefits of all what is being done here. I'm saying I'm living here for 20 years. This is a different place and for better. And I'm pretty sure that to be even better for the decade to come.
Yeah. Thank you very much on my side. It was a pleasure, Rodrigo. I was quite amazed by the work of Mutually and the impact that you guys can have around the regions. And I think you mentioned some keywords like having the vision. And is not a short-term vision, is a really long-term. When you come to invest in Africa, especially in Central Africa, you need to have like a long-term vision. You need to believe in what you see. So congrats about that and the job that Mitredi is doing. Thank you again to Invest Africa. I hope everyone enjoyed the discussion.
Thank you. Thank you all very much.
Absolutely.
Yeah.
Thank you all. And with
Thank
that, we
you.
will close. Thank you for joining us.